Hi everybody, today we are going to see the basics of accounting. Watch the entire video so that you can learn accounting. Let us learn the basics of accounting in 5 minutes. Who is the father of accounting? Luca Pacioli, 1447 to 1517, was the first person to publish detailed material on the double entry system of accounting. He was an Italian mathematician and Franciscan friar who also collaborated with his friend Leonardo da Vinci, who also took maths lessons from Pacioli. What are the golden rules of accounting? The first rule is debit what comes in, credit what goes out. Second one is credit the giver and debit the receiver. Third one is credit all income and debit all expenses. There are 3 different types of accounts. Let us see one by one. One is real, personal and nominal. Real account is then classified into 2 subcategories: intangible real account, tangible real account. Personal account is further classified into 3: natural, representative and artificial. The third account is nominal account. Now there are 2 entries. One is debit entry and credit entry. As a matter of accounting convention, these equal and opposite entries are referred to as debit entry, shortly called as DR, and credit entry, shortly called as CR. For every debit that is recorded, there must be an equal amount of or sum of amounts entered as credit. Now let us see what is a petty cash book. Petty cash book is used for recording payment of petty expenses, which are of smaller denomination like postage, stationery, conveyance, refreshment, etc. Person who maintains petty cash book is known as petty cashier, and these small expenses are termed as petty expenses. Voucher. A voucher is essentially the backup documents for accounts payable, which are bills owed by companies to vendors and suppliers. Documents in a voucher can include the supplier's invoice, amount owed, due date, general ledger accounts, and shipping receipts. There are different types of voucher: contra voucher, payment voucher, receipt voucher, journal voucher, sales voucher, debit note voucher, credit note voucher, and purchase voucher.